If you have a side hustle, even if it barely makes money, you need to hear this because the IRS is no longer ignoring side hustle income. They are actively looking for it. And most people are making the same dumb mistakes that trigger IRS letters. This isn't theory. This isn't some blog post recycled from Google. This is from first-hand experience dealing with this exact problem. So let's talk about the real rules, the real traps, and how people get screwed without even realizing it. What counts as side hustle income? In real English, side hustle income is any money you earn outside a normal W-2 paycheck. That's it. No fancy definitions, no loopholes. Common examples: Uber, Lyft, DoorDash, Instacart. Selling on eBay, Etsy, Facebook Marketplace, Amazon. Freelance work, design, editing, coding, marketing, consulting. Social media money, YouTube, TikTok, affiliates, sponsorships, cash jobs, Venmo, PayPal, Zelle. Here's the part people screw up. It does not matter if it's part-time. It does not matter if it's occasional. It does not matter if it's seasonal. It does not matter if it's just a hobby. If you got paid in exchange for a product or service, the IRS expects it reported. Period. Why the IRS is cracking down now? Simple answer: because now they can. Platforms track transactions. Marketplaces track sales. Payment processors keep records. Banks track deposits. The IRS doesn't need agents knocking on doors. They use computers, and those computers use matching. Here's how it works. The IRS compares what you report to what other companies report about you. When those numbers don't match, the computer flags it. No emotion, no discretion, just math. And that's where people get burned. The biggest lie people tell themselves: I didn't make that much, they won't care. Wrong. If you didn't get caught before, it wasn't because the amount was small. It's because the IRS didn't see it. Once they see it, the size does not protect you. Example: you make $2,200 from a side hustle. A platform sends the IRS a 1099. Your tax return shows 0.
That mismatch is clean, obvious, automatic. That's how you get an IRS letter. And here's the worst part. Even if you had expenses that wiped out the profit, the IRS doesn't see your expenses unless you report them. So now they assume you owe tax on the full amount. Not fair, but that's how it works. Mistake number 2, waiting for a 1099. This one destroys people every year. If you don't get a 1099, that does not mean the income disappears. You are required to report income whether or not you receive a form. Forms are a reporting tool, not permission slips. I've seen people say, "I never got the form." The IRS does not care. Lost mail, missed downloads, platform errors, none of that matters. If the income existed, it was your responsibility to report it. That excuse dies instantly.
Mistake number 3, thinking cash is invisible. Let's be honest, cash is harder to trace. That's true. But in the real world, people deposit it, they transfer it, they spend it, they create patterns. And if you ever get audited, patterns matter more than stories. Consistent cash deposits, regular app payments, unexplained bank activity. If you can't explain it with records, you're cooked. Mistake number 4, mixing personal and business money. This one causes absolute chaos. When side hustle money runs through personal accounts, everything gets mixed together. Income, personal transfers, business expenses. Now try proving what was business and what wasn't. You'll forget deductions, overpay taxes, or guess, which is even worse. The fix is boring but powerful: separate accounts. At minimum, use a separate checking account or credit card for your side hustle. That one move saves you pain later. This is practical. Pay attention. Mismatched income reports. Large deposits that don't fit reported income. Huge expenses with tiny revenue. Wild swings year to year. Multiple platforms reporting activity while you report nothing. All of this is scanned automatically. Costs the IRS almost nothing to send millions of letters. That's why they do it. How to stay out of trouble without losing sleep. This is not about fear. It's about control. Track your income yourself. Do not rely on year-end forms. Separate your money. Keep basic records, receipts, invoices, platform statements. Treat 1099s as confirmation, not the source. Document expenses. Don't guess. Set money aside for taxes as you go. Quarterly check-ins beat a full-year panic every time. The people who get hit hardest are the ones who say, "I'll deal with it later." Later always costs more.
Quick myth busting. Cash App income is still income. No form does not mean optional. No LLC does not mean not taxable. Hobby income is still income. The IRS does not care about your labels. They care about money movement. Real-life scenario. You make $6,000 from a side hustle. You spent $4,000 earning it. Your real profit is $2,000. Your tax bill might be around $500. If you report it properly, you're done. If you don't report it and the IRS catches it, they assume the full $6,000 is taxable. Now you're fighting a $1,500 bill, penalties, stress, and months of paperwork. Same income, 3 times the pain.
Final truth. Side hustles are everywhere now. The IRS adapted. They want their cut. And if you make it easy for them to come after you, they will. Don't assume small means safe. Don't wait for forms. Don't treat apps like invisibility cloaks. Don't mix money. Don't guess. And don't wait until April. Stay organized. Stay boring. Stay in control. If this helped, subscribe.